in well. And we're going to go to our sector spotlight right now with the group that's been lagging the market and a headwind that's actually showing some signs of life, and that's in the banks. I don't want everyone to get excited. It's not the time to go out and get long, deep into the banks, but it's a time to get a tier 1, tier 2 because they finally are diverging a little bit. Wells Fargo started it off a few days back. If you take a look here, you will see that Wells Fargo had an igniting bar. Wells Fargo came out with numbers. It actually went up on the numbers and they didn't sell them. So it broke above this descending channel, had some follow through yesterday. It's at some major resistance. I do think that this is a stock to watch or a company to watch moving forward. As long as it holds the majority of this igniting bar, I think it can go higher. So watch to see if that holds. So Wells Fargo is in the game. As far as Goldman Sachs, it was always the major bank to look at. It was considered, you can't do any wrong there. It's just going to keep going. Obviously, it has in the past few years. And then it came out with numbers that finally people said, wow, Goldman Sachs isn't the same. But we knew that already because Goldman Sachs has been lagging the market for a while now. But I see a lower descending channel that typically gives us opportunity. So if you look at Goldman Sachs that had a powerful move yesterday, you will see what I'm talking about. Here's a descending channel. And it doesn't resolve until it breaks and closes above it. People tried it here, it didn't work. Here it didn't work. Here it didn't work. Who knows? Maybe with these 2 strong days, it could finally go sideways and get going, especially if we get some resolution to some of these bank problems. So I would say let it go sideways, but if it starts going above this 134, you could see another move back, and then you get some major resistance around 144. So I'm going to look at this. I still think this is okay. As far as the bottom feeders, Bank of America is one of them. They came out with a report that failed to impress. They had some progress. Stock broke below 10. Some think it might have capitulated. We shall see. I'm long a little bit. You can see on the virtual floor. I do think that there's some small room, not a blockbuster type move, but if you look here at the chart, finally a bit of a green day. For percentage-wise, this could be okay. I think it has room to about 1040, which doesn't say not a barn-burning move, but it is what it is. And then we'll see if it can go sideways and start to maybe get back and test this resistance area around 11 and change. But this is not the quality. It's just a trade. JP Morgan has been considered the quality of the group, but it still hasn't had any traction or any follow-through. So if you look here on JP Morgan, this chart's getting a little bit better. It did have this little red dog reversal day when it broke below the low of 39.24, came back above, had a nice 3-day move. I think as long as this stock holds, I would say 40 or so and goes sideways, you might get some kind of blast off through this 41.50 area for a move back to maybe 43 or so. But in this lower area, there is some accumulation here, so we shall see. So if these banks start getting some traction, I think that's going to help the indices. That's going to help investor mentality that unfortunately probably has too many banks in their holdings and not enough leaders that have actually been working. So let's see if that can move forward. And then once we come back from the commercial break, I'll show you another sector that I've actually been leading and not lagging, and that's the agricultural group. I'll be back right after this.